Good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, March 30th, 2022. Good day in the markets today. And I say good day because it actually followed the Elliott, and as I presented it on last night's update. And it was pleasant for a change because it obviously has just been driving itself higher. And to actually put in a decent pullback that it can be recognizable as a fourth wave correction, I was happy about that because it's been presenting its challenges along the way. In any case, starting here on the daily chart, nothing really to update on that other than, look, we are getting up pretty high. I see it, but the market truly does have up to 4808.50 to go and not break any Elliott rules. So that keeps this count into play. And I'm going to take it down to the 1 hour. So we're going to look at some of the internals here to see what happened today. It was pretty much picture perfect. But again, so yesterday's high at 46.31 did end up being the completion point for the minute third wave. And as I discussed last night, that could be possible, in which case we're looking for a fourth wave and then for the rally to pick up again. All right, so I'm taking this down one more time so I can bring it into a little bit more clarity. So here we have it exactly, and it was just nice because there was the high, then we drifted around. So it could have been very easily A, B, C, D, and then we just kind of waffle and do a 5 down. It's kind of ugly even on the 30-minute, but it counts out pretty well. And the fact that we're now back above here, and even here, leaves it very clean that it's likely complete and we're now heading back up. So going back out to the hourly chart, that being the case, it puts us more on track. Now, what I also like, one more time, sorry, I'm flipping around the chart, but I want to go and show this. This was really nice. Now, again, here we are coming into the final. Now we're climbing up to the final. So we get started, but basically just get back to below a moving average, or just back towards it. And then once we got into the after hour, which came about right there, they continued to buy it. So here the slide down got to a point where we found support, and the nice strength coming off of it gave stronger support to, stronger support that it completed that fourth wave, which is basically what I'm trying to put together. Now back out here, if that is the case, and I'm feeling strongly that it is, now I'm expecting the fifth wave to start to unfold. Now I can do one more Fibonacci, but it's really going to clog up the charts, and that would be to chart out where expectations for wave 5 can be. But first thing I want to do is actually show the zone. So our first zone is going to be to get above 46.31, which was yesterday's high. So we have 46.38, and then anywhere in between that and 46.84. So it's going to be dependent on what the structure actually looks like. And again, on an hourly chart, we're going to have to go down to the 30-minute or 15 possibly to actually count all the internals. But once we get 5 and we're at that new high, we start to look for either follow through, being that it's just like 1 of 5, et cetera, et cetera. So there are other possibilities, but I will begin to look for, when it gets into the zones, for it to be complete. And I'm now going to be looking for signals that we're shifting course. And we'll wait and allow it to happen. How about that? The call is right now that if we stay above that 50 and we stay moving, we're sitting into all these moving averages right now. And so we are waiting for larger direction as to where we're going to go. So we're sitting right at it, which is nice. The hourly 50, it broke, We dove, it came back, we rallied. Did it going in both directions. That's the point I wanted to make. We got it going in both directions where it broke the 50, we accelerated to the downside, but you can see it got purchased right back. That's what that green tail is telling you. And so we got back to the 50 and then got above it. And then in the after hours, we tacked on a little bit more. Came back, closed pretty much right at that 4,600 level. And that's where we remain right now. So for tomorrow, I think we need to continue to break. So the next interesting or more notable break will be the 20. So the 50 will start to turn. The 4, the 8 need to get themselves, come on back there, need to get themselves back above the 20. Then we're starting to line up to go up. So it's not going to take much to reset the clock and get it going to get above 46.31. So upside, that's the expectation. We should see periods of some acceleration, but then it's a lot's going to be dependent on what happens to Tesla, Microsoft, Google, Facebook, Amazon, Apple. They're all in the party now. They're all into Friday's expiration. And again, I know I've talked about these, and I think we're going to see another large amount, maybe not as high as $3.6 trillion, which happened on the March monthly expiration, but I think we've got other positions up because they're still pushing. They're still playing the game until I start to see the premium shift. That'll start to tell us what the market is feeling direction is. So I'm looking for a premium shift here to help give us support into clues of how the trades are not going to be set up. So in any case, I am looking for upside. 46.38 is next up. And then after that, we start to break towards that zone. We have tomorrow and Friday. So I'm looking for what Friday's expiration will be. We still have that news on Tesla, so it remains volatile. Google, same story. Facebook is now wants to flirt with 230 and above. So again, I'm going to be watching there very carefully because as an option trader, I'm hopefully like they did at last week's expiration, at the money gets to have a lot of conversion / reversal potential. And while the premium remains high, once the premium evaporates, you don't touch it because then you're closing. In any case, I will be looking for those coming into Friday to see where they want to settle and how they're treating that conversion reversal. And that's all premium for. All right, so there's the marching orders. We have our upside, we have our downside. I think downside will be limited. Again, we might see another quick swap lower, just boom, come down, get below where we were today. I don't think, unless we've got something to back it up, that on a technical basis, it's that the market really is going to choose to do that. I would suspect that or expect that the buyers are going to remain and now start to keep it boosting it up a little bit. All right, that's where it's going to end. Our next update will be on Thursday, the 31st.